Hi, and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara Mays, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome to another episode of Two CPAs and the Mic. We are so glad you are joining us today. We are covering relevant business and tax topics. We're applying straight talk and practical information without all the jargon and stuffiness that normally goes along with our industry. My name is Jeff Frable. I'm a partner at CCK Strategies, and I'm here with my co-host, Sara. What's up?
Hey, Frable. I'm Sara Mays, and I'm also a partner at CCK Strategies.
I don't think we mentioned that last episode. So, anyway. And KP.
Hello.
We didn't know if you were going to stay with us, but you were.
Think it over.
Yeah.
I had to think it over, and I opted in.
Well, we're glad you're here.
Thank you.
Keeping us on the straight and narrow today.
Thank you.
So today is October 16th. The day this is airing is October 16th. And why is that important to us as tax professionals, Sara?
Well, it's important because it is the end of the 2024 filing season.
No way. You mean it finally ended?
Right? Yes. Well, I guess there's a few more that could hang out, but officially it is the end of 2024, and it means we're breathing today for a little bit.
We're actually kind of talking to our future self on this podcast because...
Jeff, I think we need to take a breath.
You did so great, Sara.
We did so great.
We finished that deadline really well.
We did, but but it's also the start of year-end planning.
Year-end planning. You know, we should do a podcast about year-end planning.
That's a great idea. Maybe on October 16th we will do that.
Is that what we're doing right now?
Yes.
Yes, we are. We are talking about year-end planning today. So, as I've been saying, if you're strapping on your shoes or going for a walk and you want to listen to our podcast, if you're a business owner, you will need to definitely stay and listen, because if you don't already understand the beauty of a proactive and strategic tax and tax planning relationship, you need one. If you're an individual, you're just kind of you don't own a business, you're an employee, you may think, I don't need to listen to this because I don't do any tax planning. There are certain needs for individuals to do tax planning. We'll talk about those. And if you're a professional that's in our industry, listen to what we do. Compare our thoughts and our ideas and desires with what you're doing at work, whether that's in the private or public sector. So again, I think there's something for everyone if they'll stay on. But again, we're going to talk about year-end planning. We made this real easy, Sara. Yeah. We're going to talk about the who, what, where, when, how, why.
We did all of it.
Of year-end planning. And so who's on the mic today?
Me. And you.
You and me and Christy makes three.
And Christy, yes.
We have nobody specific. No
Wait, that made Christy giggle.
I'm just watching you both.
I know.
I'm really enjoying this.
Yeah, okay.
Thank you.
Well, we're not having anybody specific on the mic today, but you are right. Yep. We're talking about this. And really, we're joking, but it really is important. In fact, it's one of what I would say the cornerstones of CCK and the way we treat our clients and the way we are strategic and proactive. So,
and I'll say it is my favorite time of year.
Why is it your favorite time of year?
I know, it's weird.
Why is planning so important?
Well, it's important, but let's talk about why it's fun.
Okay.
I think it's fun, and it's where you get a look in the future. For public accountants and CPAs, typically we're looking in the past. When we're filing tax returns and looking at those things, we're recording things and filing things that have already happened. But when we are getting into year-end planning, we actually get to play and strategize and do all of the cool things and the what ifs and all of the scenarios. If this happens, then this could happen, and then this could happen. And so it's to me, it's the time of year we get to play around.
Well, and it also, if we do this right in the way we can do it, it sets all of next year up to be a whole lot better, not only for our clients, but also for us as professionals, because we're always going to go back. The question you get all the time in your review notes is, where are we compared to planning?
Yeah.
And that doesn't mean things can't change from planning, but if they did, needs to be a specific reason why.
Yeah.
But if we did this right, our clients feel more strategic, they feel more proactive, they feel more engaged, and they know what's going on in the next 12 months. And that's extremely important from an entrepreneurial business owner perspective. So
yeah. And I don't mean play around very lightly either. It really is a good time to really dig in and see what the future could hold.
Because we're going to do all this work, and then at the very end, we're going to say, just go buy an SUV to reduce your tax. I was in a meeting with a prospective client last week, and we joke about it, but that comes up so often, where it's like a new client will say, "Yeah, I got told that I had this high tax bill." And the only thing they really said was, well, do you need a new car? Go buy something over 6,000 pounds and you can write it off, or GVW, and write it off. And it's like, there's just no creativity to that. And not to mention whether they really need it.
Right. It's the easy cop out. And yes, you do get the deduction, but if somebody gives you that as an answer, they're not looking at the who, what, when, where, why, and how of, do you really need that SUV?
Yeah.
Yeah.
So again, this is a cornerstone of who we are. And in some ways, we were joking about airing this on the 16th. And the reason for airing it on the 16th is just so we can start thinking that way. But we literally go from the close of one season to the next day, starting to think about the beginning of the next season. And part of that reason is because, we have clients that we do work with throughout the entire year, but a lot of them are, let's do this check-in at the end of the year.
Yeah.
And we don't have a whole lot of time to do that.
No, right.
No, we don't. So
you guys, from my perspective, when I used to be in recruiting, when I would talk to candidates, I would talk to them about the year. And a lot of people think that the busy time ends if they don't know tax.
Right.
They think April 15th.
Yeah.
Yeah. Yeah.
And I talk about the first of the year is pretty easy because the extension deadlines there's no forgiveness. That's it. You've extended, you crank it out. And then at CCK, we go straight into year-end planning. So if I have some serious initiatives that I need a partner or a contact on, I know my deadlines. And year-end planning is not the time if I need someone to focus totally on me. So I make sure I plan my year accordingly. Of course, they're going to give me the attention. You're going to give me what I need because that's how we work together. But that was part of a message that was really strong to help people understand how seriously we take this strategy.
Yes. We do not go home on October 16th
and take the rest of the year off. No, and again, it goes back to taking care of clients and giving them insight and giving them understanding in advance. And so before we get too much further, Sara, let's answer the question of just exactly what year-end planning is. We've kind of danced around a little bit here and there, but how would you define, if we have a listener who just has no clue what year-end planning is, how would you describe it to them?
I would describe it as, you're looking at what your business or what you as an individual have done since the beginning of the year till a certain date in time that has already been, you've already recorded it. It's done. We can't go back and really change anything. And then we look to see what from that point in time, say it's September 30th. And then we look to see what the last quarter of the year is going to be. And let's look at, is your income cyclical? As you know, in public accounting, we are a very cyclical season where we have all of our business in the first few months of the year. And then again in the middle of the year, but then toward the end of the year, we really don't have a lot of business or a farmer, they're doing a lot of crop harvesting. So they're going to have a lot of income in the last part of the year. Well, we look at that. Every business has cyclical in nature. So you're looking at what could be at the end of the year, not just from an income standpoint, but also from an expense standpoint. There could be some expenses that go out, and we can make decisions on those items to really kind of give a good projection of where we think you're going to land from a taxable income standpoint at the end of the year, so that you can proactively prepare for what kind of cash flows you need for your fourth quarter estimates in January and for your final tax bill. And that's, you pay out in April, and that first quarter estimate that's also due in April. And that's a lot of cash flowing out in a 4-month period.
Yeah. So it's maybe two or threefold. It's finding out and that doesn't mean that you just calculate a tax liability and say, here it is.
Right.
I mean, that's just the beginning of a conversation, because here at CCK, we are results driven. And so and that doesn't mean that you get a bad answer, so you work hard to make it better. It's just that way all the time. Do we have not even the best answer, but do we have the right answer?
Right.
And that's a whole lot different than the best answer, because some people may think, well, if I report no income, that's what I want. And that's just not necessarily the case.
No.
It's really funny. We play in this world with our clients where they don't want to pay more tax than they have to, but when they want to show their operations to people like bankers, they want that to look really good.
Yes.
And the bankers got kind of smart and they said, no, we just want to see what's on your tax return.
Right. Yes.
And so sometimes you have to walk that line, and whether income is going to go up or going to go down. Sometimes you may want to pay more tax now because you're going to have higher rates next year or something like that. So it's just the beginning of a conversation that ends up with agreeing that this is kind of where we think things are going to land. Here's your timeline on cash flow. And if we come away with anything that we need to implement before the end of the year or the reporting period, we go ahead and do that. And sometimes it includes the purchase of equipment, but not necessarily SUVs.
Well, and also we also don't look at, I know we mentioned like, hey, we're going to calculate what the end of the year looks like, but there are just some decisions that can be made that, your year end business doesn't stop on December 31st. No. Business continues to go. And so we may decide, we can make some decisions like, should we do this in this tax year, or should we push that to the next tax year? And not just because of only tax rates, but some people could be selling their business and they know that in the next year. And so we may hold off on doing certain items.
Absolutely.
Because we don't know. But so it's not just looking about one tax year. It is about also looking ahead, which is also what makes it fun.
Absolutely. And the thing about it is that we feel like this is something that is just so common, because it's a cornerstone of who we are and what we do. But I've said before, the three biggest issues I talk to prospective clients about is, number one, they think they pay too much tax. Mm-hmm. So this is an issue. Doing this allows us to make sure that they're paying the right amount of tax. There's no planning. There's no proactive approach, which still boggles my mind to this day. But so this again is what we're doing. We're being proactive and strategic. And the third thing is that they don't feel like they get return phone calls. Now that has nothing to do with year-end planning, but
right.
But reaching out and going, hey, we need to if this isn't on your mind, I'm going to put it there because it needs to be important to you. We don't like surprises just as much as our clients don't.
Right.
And so the more strategic we can be, the better.
Right.
So,
exactly.
So Sarah, we talked about kind of what the year-end planning is, but why do you think it's important?
It's important because it helps kind of, I'm getting tongue-tied. I'm trying to spit it out because I can't say surprise. We're trying to eliminate or tamper down as many surprises as we can going into April. One of the things that Jeff and I hear often, and a lot of other people in our firm too, is my prior tax accountant told me on April 14th what my tax liability was going to be, and it was $80,000. And I would fall on the floor if I was told that exact same thing. So it is tampering down any surprises. It's also trying to avoid penalties and interest on making payments late.
Right.
Now, Frable.
Yes.
I think one of the things that I think we need to definitely tell our listeners is how often you should be making your tax payments to avoid penalties.
Oh, you mean about being strategic with the timing versus just whenever I feel like it?
Right. Yes.
Well, and that's a very important part of the year-end planning process is this timeline that we're talking about. It not only estimates kind of what your tax due is, but also what your estimates may be for the following year. So yeah, go ahead. Let's talk about explain how often should I be paying tax?
You should be if you're a business owner and self-employed and you're not having any payroll or any withholdings withheld from a paycheck because you are not earning a paycheck, you're getting paid from your own customers and clients, you are responsible for paying estimated tax payments. And those are quarterly. And the quarters are weird. The payment due dates are April 15th, June 15th, September 15th, and then the following January 15th. And there is an underpayment penalty if you don't pay those on time. And I think that interest rate varies on what that penalty amount is.
I will generally tell people, because even though we give a timeline, it's up to the business owner to decide how they want to manage their cash flow. And there are plenty of times where the comment will be made, well, I need this money for that. Mm-hmm. And the conversation we have is, well, okay, there could be some underpayment penalty, which isn't really punitive. But if you can take your money and do something with it that gets a huge return or builds the value of your business for a short period of time,
right?
It may be it's a cost of doing it's just a different way of borrowing money.
That's right.
I mean, when you're
borrowing it from the government.
When we were doing work in the cannabis industry, they pay a lot of tax, and there was no lending opportunity in that industry. And so I would hear all the time, well, what's my interest rate going to be with the government? Well, it's going to be, 5, 6, 7%. Well, I'm going to pay 20% with this mezzanine lending because we can't get traditional lending. So I'd rather pay the lower, that rate.
Yeah.
And so that, again, it goes back to the business owner. It's up to them to make that decision. But 4 times a year, you're supposed to pay that in. It's supposed to be pretty consistent.
Yep.
The other thing that we reference is that you can make a minimum amount of a payment.
Right.
And so, in other words, to make this really easy, if your tax is going up next year and this year's tax was $100 and next year you think it's going to be $1,000, you only have to pay in the $100 until April 15th, and there's no penalty on that, and you can pay everything that's additional after that. But again, you are required to pay tax at a certain rate, at a certain consistency, at a certain time. And so that's part of the year-end planning process. But I agree with you. Some of the things I wrote down, do you like to pay penalties and interest?
Right.
Then don't do year-end planning. Do you like surprises? Then don't do year-end planning. Would you rather pay strategically?
Or willy-nilly.
Or willy-nilly. So
I like
then, then you need the planning. But when we transition into who needs the planning, the group of people that come straight to the front of the line are the business owners.
That's right.
You want to talk a little bit about that?
Yeah, business owners, like I mentioned earlier, you don't have a paycheck, you're not paying yourself and having those withholdings taken out for you. So it is your responsibility to make those payments. And one thing that as a business owner too, that some of them are surprised with is that, they kind of have two taxes that they're having to look at. And that one of those is, you've got your ordinary tax rates, which is what most people are familiar with, the brackets, the 10% all the way up to the 37% top bracket. But then they're also responsible for self-employment tax, which is Social Security and Medicare. And that's a 15.3%. And that takes a lot of people by surprise, especially when they become new business owners. And so, and Jeff even has this, I'm going to skip around a little bit. New business owners absolutely need year-end planning. If you have that change, if you're taking that leap and going out on your own, you absolutely need to find an advisor and look into year-end planning, because there are some things that you probably need to be educated on of things to look out for that you may not even be aware of, especially you want to do it before tax time comes.
Well, the truth of the matter is that entrepreneurial business owner is doing that because they have a gift to do something, just like we have a gift to do what we do. And I'm a big proponent of stay in your lane and do what makes you money.
Yeah.
So you don't need to know the tax law, but you need to know the issues that you need to deal with. I will take care of everything else, but you don't need to know the specifics, but you do need to know that you have an issue. I know this is a very small example, but my son is moving from a W-2 employee to a contract laborer. And so last weekend we had a conversation and I said, hey, every mile from where you're going to have to pay this extra 15%. or self-employment tax. But every mile you drive, every piece of equipment you buy, these become tax deductions. And he was like, well, how much should I be saving? And I told him, and I said, now you're paying tax on your net number, not your gross number. And it just like a light went off. And he's like, oh, that's why I'm tracking those expenses.
Yes.
Like, yes, absolutely. So our business owners, they know how to do what they do well.
Right.
And they need don't be ashamed of that. That's just not your lane. Mm-hmm. Let us take care of something like that. So yeah, business owners, 100%, 100. Is that where the youngins speak it? So they need the year-end planning.
If someone has not sat in a year-end planning session with their advisor, or if they are a new business owner, what do they need to bring to the meeting? Because if I'm listening to this podcast, you might be speaking a language I don't understand. So what does a business owner need to know to come prepared and not be intimidated by this meeting?
Financial statements,
but not everybody has a financial statement, especially new business owner. He said that. Yeah, he said that facetiously. Yeah, I think that it is. It almost feels like you're giving your tax information to your accountant 2 times a year. I mean, and I say 2 times a year, but I have clients that do like to have updates throughout the year, but you're almost giving the exact same information that you would if you're dropping your information off for tax preparation. We need to know what your income is going to be. We need to know what your expenses has already been and what they will be. And we are, using that kind of that same information, but projected. We are making some assumptions and calculations to get to a projected taxable income to calculate your tax. But yeah, I mean, it's a lot of very similar information that you would bring for tax prep. I ask my clients, hey, if you have a spouse, give me your pay stub or give me their pay stub so we can calculate all of that information into that, because they have withholdings that we need to consider.
And you also will have different, just like you have different people that want to do different things. So you may have a client that just wants to come in and you just have a conversation, but they know their numbers. And especially if how does it compare to last year? And they can give you all that detail. Sometimes you have the clients that want to bring in the financial statements that have just been closed out the week before, and they want it more down to we rarely try to get down to the penny, obviously, but we're doing projections and we're doing ranges, but some of them will want a little bit more information. So it's a little bit more detailed of a calculation. It
really is more based on what you want. But to your question of, I've never been to one before. I've never had a year-end planning meeting. It is a very similar exercise as you would of preparing a tax return without, thank goodness, the forms and all the signatures and all the things that go with it.
And then when they say they don't like it, well, then let's start to work on it and we'll figure out a way to
like
get
the
there.
answer.
So,
yeah.
So the business owners are number one. Individuals, like we said before, sometimes you need that planning, sometimes you don't. There's this concept of accumulating deductions, especially with itemized deductions, because the threshold's so high that sometimes taxpayers will kind of combine their charitable contributions into one year. So take a prior year and a current year, do it in the same year so that they can itemize and get the benefit for those things. So it just depends on the individual situation. But I would say also with individuals, anytime there's a change
in tax law, yes.
Change in tax law, a change from employed to self-employed, starting a new business.
Yeah.
Kids. I mean, it doesn't work. It doesn't hurt to at least have a conversation.
Kids, and even going into divorce or death. Yeah. Absolutely. I think you should bring in. But going back to change in tax law, I strongly urge everybody. There's so much change that is coming either in this tax year 2025 or 2026 that you should speak to an advisor on some level to see what those impacts could be to you.
Or at the very least, go back several episodes to our bonus episode
when you hear about the details.
About the one big, beautiful bill. So, okay, so that's the what and the who. When should we be doing the year-end planning, Sarah?
Well, today,
now,
October 16th. You absolutely should be. But definitely a really good time to do it is is at the end of the year in the last quarter. But if there's also, you should do it if there's any change that's happening in especially if you're a business owner in your business, you should be at least reach out and say, hey, what's the impact for me on this? The big things that I can think of are if you sell a piece of equipment, or if you're a realtor or do rental properties and you're selling a rental property, reach out and see what the tax impact will be for those. Or if you're just straight up selling your business.
Yeah.
Or the opposite, if you're going to buy a business, I think you should reach out and we can do some year-end planning, even if that's March 1st.
Yeah.
I think we can see the impact
straight
of that.
up selling your business.
Straight up. I had an example of why these meetings are so important this week. So I was talking to a new client and they fell into category 2, or category 1 and 2. They felt like they paid too much tax. And we got to this discussion about why they paid so much tax. And it was because they sold a piece of property that was used in a business. And he was like, we paid this. We got like $100,000 more when we sold it. And now you're telling me I owe $400,000 or $500,000. Well, they didn't have the conversation before the sale. So he didn't know that he was basically, the concept of basis, and he had depreciated this property. So there was income related to the recapture of this depreciation. So 2 years ago, he had a great deduction.
Oh, yeah.
And now he's having to recapture that income, and he never had a conversation about it before. His conversation didn't come until like right before April 15th.
Oh, wow.
And so that's where these discussions, because our clients don't tell us everything. And so this is just another opportunity for us to drip what we do and how we do it.
Yeah.
But also get them to tell us what they've been doing. So
you're throwing out 100 drip.
I know.
I mean, he is like,
I
he
thought
is
it wasn't
down
that
with the Gen
deep, but
Z.
it is. No, it is.
Yes.
I mean, I'll also throw this out. The more dynamic your business, the more often you need to do this. It just becomes a continual planning thing, quarterly or every 4 or 5 months, especially just to get a gauge of what's going on. So the more dynamic, the more things change, the more you really need this.
It's like conversations become so important.
So important.
Okay. So we kind of touched on this, but the how. So, I mean, we don't want to go into too many details here, but it generally starts with a conversation or an examination of the financial reporting for the year.
Right.
You mentioned it before, trends. We could be talking in September, October. It could be a medical practice, like a dentist's office. And you say, well, do I just annualize your income based upon the first 9 months? And they go, heck no. You need to know your client. And so, because that impacts your projections.
That's right. And another thing too, just to touch on what we talked about earlier too, when you're doing that, when you're starting with those financials, you have to have the conversations on, especially when you come up with an answer, a preliminary answer, we need to talk about what kind of income is coming, and is there a possibility to defer it to the next tax year based on where, if we have a much higher income bracket that you are in this year, maybe we can push some income to the next year. Do you have the opportunity to do that? Same with expenses. Do we want to pay more expenses at the end of the year versus maybe we should wait and pay that in January?
Why in the heck would I want to wait to pay expenses?
Because you may have had a really down year and you're in a really good tax bracket. So if you're paying more expenses, you're going to not have not as much bang for your buck. Thank you. Yeah. Yes. You're wasting expenses in a low tax bracket when you could be offsetting them in a higher tax bracket.
Yeah. And so the other part of this discussion that becomes very important, and we've been kind of joking about the whole SUV thing, but equipment and depreciation play a significant role in this process, especially with the most recent tax bill. So do you want to kind of jump into that a little bit?
Yeah, first we keep calling it the one big beautiful bill, but Jeff got to rub shoulders with some of our congressmen about a month ago. What is the new name?
I don't remember.
Are we talking about HR 1?
Yes.
Yeah. But there's a new name?
Yes.
It's the Working
Families Tax Cut
something.
Okay.
Yeah. Well, technically, they stripped that one big beautiful bill title from the law because it didn't adhere to certain policies or whatever.
Compliance stuff.
Yeah, it wasn't
Okay.
a political thing. It was just it was a policy procedure thing.
Mm-hmm.
But yeah, it's like the Working Families Tax Cut Act or whatever.
Yeah.
But
Okay.
Yeah.
What was your question?
I have a question. While you're remembering your question,
I remembered it.
when you come back to when you're coming into this meeting, I'm a business owner. Does my spouse need to be with me,
That's a good question, Christy.
or my business partner?
Partner,
yes.
most likely yes.
If your spouse is your business partner, yes. However, I have many clients that their spouses really, their sweet spot is not the numbers. And so the partner with the numbers as their sweet spot, they're usually the ones that come. But if the spouse is highly involved and they do all the things together, then absolutely they should
I think it goes
come.
back to strengths. If you and I are business partners and your role and your sweet spot is the marketing and growth and all that kind of stuff, and mine is understanding more of the tax issues, I think I go, and then hopefully we have a relationship where we trust each other.
We meet for coffee
Yeah.
later and debrief.
Yes.
Okay.
Yeah, absolutely. And
Or
then
hot chocolate in your case.
That's right. It's just a part of how you operate as business partners. So I prefer to have people in there that are informed and can at least understand what we're talking about. And you know what? If you don't, just sit in there and shake your head, and at least you're absorbing some of that stuff.
You guys know where I'm coming from, because not everybody is swallowing what you're sharing.
What we're serving.
Yeah, right. And so that's why I asked.
That's a good question.
Let's just not assume that everyone gets it.
So let's go back to the question that Sarah forgot. I was asking you about equipment and depreciation and why that's important in year-end planning.
SUV.
Yeah, you got to buy that SUV. So historically, there has been accelerated depreciation around equipment, certain types of vehicles that it's called bonus depreciation, where you can take a percentage of the total cost of the piece of equipment or vehicle in year one, the year that you purchase it. What's so important with this year compared to years past, especially with the passage of the new bill, is that 100% bonus is back in play. So if you buy $1 million piece of equipment, you can write it all off in year one if you wanted to. But that's one of the things that is beautiful in year-end planning, is that we can make those decisions now, and you guys can see. And when I say you guys, you people out there.
Which people are you? Are you talking about your people or my people?
All you people out there that need year-end planning, all you people, then you can see what the impact is if you depreciate.
Yeah, and you can run different scenarios.
Keeping it real.
Yeah,
Yes, thank you for keeping it real.
And this, again, I'm going to go back. This is another good time to have a conversation about potential impact in the future, because I had a client conversation once before where we bought vehicles and we wrote them off, and then they traded them in. And his comment to me was, we were not told about the recapture. So you had this benefit a year or two ago, and now you have a $50,000, $60,000 of additional income that they weren't planning on. If you're having these meetings, it gives you the opportunity to have that
You
conversation.
guys, in this conversation, is this where you would talked about changes, talking about new? What if I am a new client and I am in an LLC and you really think I should be? I know we're talking structure.
Yep.
Did I jump the gun?
No, I know where you're going.
Okay.
Perfect.
Okay.
Ask the question. Finish it up.
Well, I kind of did, but what if I've been with another advisor and I've been in what we could say the
wrong structure.
I was going to say the less advantageous tax structure or the business structure.
I'm going to refer you to, I don't know the episode number, but I think it's Choose Your Avatar.
Yeah. We talked about entity selection.
But what an appropriate name. Tell us about that.
But
Choose Your Avatar.
You're absolutely right, Chrissy. This is, we go back to this annually and go, is this still the right, is this still the right structure? And it's really good to do this before next year, because there may be certain forms or certain extensions that we have to file because we're not exactly certain what we want to do, and we want to keep our options open and available as long as we possibly can. So it affects everything that we do going forward.
Will HR1 impact any of the structure, or is that TBD? That's TBD is
TBD.
to be determined.
Man, we are all about some
acronyms and stuff today.
Yes.
I think it's to be determined. It's a business by business
consideration. It should be a conversation that you touch on every year. It may be as simple as, your structure's great, we'll just keep going. But it is a discussion that I think you should have if it's still the right structure
gives you the
for
opportunity.
you.
The forum to have that discussion. So
right. And and what the ramifications are if you make a change.
Yeah, absolutely. So there's not only the kind of the discussion about what activity has been like, what's going to be like, projections, but there's also, I think the other part of this that's really important to understand is your state situation, because you may not have any more or less taxable income, but maybe something changed with the states that you've been operating in. And so now we have something like a pass-through election that needs to be considered, or just filing in a new state and what that means.
Yeah, that's a good point. And year-end planning is a really good time to really look at if your business has expanded to another state. Tell your tax advisor, because you do need to file in another state and pay tax in that state. And you may not have even realized it if you hadn't mentioned it before. And it's a really good time of year also to what we in our industry call a state nexus study. So nexus is what each state government determines if you have activity in that state and you have a filing requirement.
Yep. And so great conversations to have at year end. Okay. So we've been talking a lot about the business owner. Let's not exclude the individual. And so there are certain things that even if you're not a business owner, if you're an employee or of some kind, or have some complexity your tax return, there's things that you can be doing at year end. You could start doing now. Sarah, what might some of those things be?
You can start organizing your bank account activity, downloading your bank statements and your credit card statements, and start kind of compiling what your income and expenses have been for the year. I think year-end planning is a really good time to, at least if you start compiling that information before the end of the year, you can start talking to your advisor now about what expenses are deductible versus not. And that way you're not doing it last minute. Take the time and do it now.
Well, and one of the things I jotted down is now's a good time to tell your CPA, especially if it's a new provider, that you want to work with them. So that they can kind of they can assess their workflow and their capacity and all that kind of stuff. And quite honestly,
what does that mean, you guys? Do I just email someone and ask them the question about what do I need to be gathering for our year end? Or do I have to have a meeting to prepare for the meeting?
No, you don't have to have a meeting to prepare for the meeting, because a meeting with me and Jeff would be awesome in and of itself. No.
Podcast.
Email podcast@cckcpa.com and we can get you going, because it is a good time now to do that, not wait. And yes, just email.
Well, and I just know as a human being, if someone shows up in March or in April, you're kind of like, unless there's, extenuating circumstances.
If they're a human being, like compared to what, like a dog or something?
Well, it's like this. If you call Sarah or I or email us, and your first question is, well, how much are your fees? Our first answer is going to be, you're probably not the right match for us, because we deal with value and we deal with creating that value, and we think about things differently. And sometimes you get what you pay for.
Yes.
And so just having that person on the ledger, on the schedule that goes, okay, I know they're going to come. And it also, quite honestly, things get a little hectic in March and April. So we want to get you into the system so that you're being tracked and we're getting things filed and like extensions and all that kind of stuff. So,
and we know life happens and your CPA could just quit or
die
or pass away or I mean, and so we know, we know life happens, but really and honestly, the best time really is to start now. Start looking now.
I love that. That is what I wanted to hear, because the things that we're talking about are complex. Mm-hmm. And so now. Okay.
Mm-hmm. Yeah, especially when you have the opportunity to take a breath and think through some things and have the time that even after you leave the meeting, something may come to mind that you can pick that conversation back up and you have time to react to it.
I've heard both of you talk to clients and about clients, and so much of the conversation is not always about their financial statement, but it's about their business goals, their objectives, and their dreams. And I think what you guys do best is really connecting with them to help those objectives and dreams become reality.
Ooh.
And it's a lot more than a financial statement. It's
Right.
about the heart of the person and the people that they employ.
Yeah.
Maybe we should add goal oriented to our core values. What do you think?
I think
Oh,
that's
it's already there.
great. I think that's great. No, but
I'm so
Christy,
encouraged.
Christy, no, that is truly the point. I know we've been talking about year-end planning and more of the mechanics of that, but really at the end of the day, it is about furthering your business and going where you want to take it.
And being in a position where you are that truly trusted advisor. And it's not, we don't have to just talk about tax in that situation.
Right.
In that meeting, that client may need an attorney, they may need something else. And it's just a matter of doing what you can to take care of the client is really what it all boils down to. And the more interactions we have, the better opportunity we have to care for them. So that's just a whole piece of this process that starts on October 16th and it doesn't end until October 15th of the next year. So.
That's right.
All right. So I think we pretty much covered everything, Sarah. Can you think of anything else I think we did it.
Just do it. Do year-end planning.
Do your year-end
Just
planning.
do it.
I know it's hard. I know it's difficult, but the first time that you catch something, you'll say, or the first time you get surprised,
Yes.
you're going to say, I'm never going to do that again.
Right.
So,
And join in the fun. I said at the beginning of this, year-end planning is the funnest time of year. Get in on the fun.
get in on the fun. That's how us CPAs like to party.
Right.
But and in all seriousness, I know we work very hard to keep from being salesy.
Right.
But if you are listening to this episode and you're like, I have never experienced that, you need to email us at podcast@cckcpa.com and we will take care of you and we will make sure you have a very pleasant experience. But
Straight up.
Hey, I'm all for the call to action.
Yes.
Call to
Email
action.
us, talk to us, ask
Yes.
questions.
But unfortunately, we skipped out of order on our agenda because we accidentally avoided the
Rapid fire. We're going to do a cool rapid fire today. Are we going to go? Me and Jeff are going to rapid fire
Back and forth.
questions each other. Are we going to do one-on-one? Like me do all five? Or
No, back and forth.
Okay.
All right.
You go first.
Okay. What do you collect?
Humans. Sorry.
Yeah. Please don't come after me.
What do you collect?
Medals. I collect
You
running. Yes, I collect running medals.
I thought you
All right.
meant metal,
That's where I thought you would go.
Yes.
like steel
Yes.
or something.
Nickel.
I wish it was gold. I need to start collecting gold. Okay.
And I met humans like friends. People.
Yeah, obviously
she loves
not.
it.
yeah, not like
Buffalo
human
Bill.
bodies. Please don't.
We better finish up quick.
Okay, so I have some more professional geared rapid fires.
Oh,
so
okay.
Who sends, you or me, who sends more emails that could have been a meeting?
Wow. Who sends more emails that could have been? Probably me.
Yes.
Yeah.
Word.
Yeah.
Jeff is known for his very long emails.
Yes. They're understandable though.
Yes. They're clear, but
What never fails to make you laugh?
ooh, everything is funny. I always laugh. You can ask my sister and Robert all the time.
Okay. Everything and everybody.
Everything. Yeah. If somebody falls down, you're going to get a laugh out of me. If anybody says something stupid, you're going to get a laugh,
okay.
even if they didn't think it was funny.
All right.
Okay. Who's your favorite office character?
Favorite office character? It's not Michael Scott. It is, I don't want to say Jim. That's too cliche-ish. Probably Dwight. Probably Dwight. I think at the end of the day, I mean, I love Jim, but probably Dwight. Andy Bernard gets on me too much, and so does Michael Scott. So
Yes. And Dwight is a rule follower, and we're rule followers.
Yeah, very much so. Okay. Do you have any tattoos?
I do not.
Okay.
What is your favorite ride at Disney?
Guardians of the Galaxy.
And what's
Cosmic Rewind.
What park is that in?
Epcot.
Epcot.
Listening to Everybody Wants to Rule the World or Iran. That's how specific
Did you
I
read
get.
her mind? How did you know what she was going to ask right after?
No. What do you mean?
You just started answering when she was.
I was providing.
She
asked me what ride I was giving up.
That's what you were going to ask.
I knew.
I go through the whole thing.
Mm-hmm.
Okay. Night in or night out?
Night in.
Okay.
I am a homebody through and through. Okay. Would you be likely to text on my way, but still be at home?
No, because if I don't text on my way unless I'm on my way. It's a rule.
It's a lie.
It's a lie. It's a lie. All right. Last question that I have.
Okay.
What is the weirdest thing your pet does?
She licks everything. I have a 5-year-old pit bull mix. Her name is Java. And just fun fact, I have a chocolate lab named Mocha.
Okay.
But Java licks
Okay.
will lick you from your elbow all the way down to your hand, but she licks the walls. She licks the couch. She licks doors. She licks everything. That's the weirdest thing. All right. What is your favorite professional decade? Like out of your whole professional career, what's your favorite decade?
Ooh, probably right now.
Oh,
I think.
good.
Yeah.
Okay.
I mean, I think so right now. I mean, there was fun times earlier.
Mm-hmm.
Becoming partners really kind of a cool deal.
Yeah.
It's fun. It's exciting. But I think right now I'm starting to learn more. As you get older, you start to learn more of who you are. And hopefully, and we've talked about this in other episodes about how we at CCK encourage that and look for ways to maximize those strengths. So I think finally getting there after several years. So
Several decades.
Several decades, yeah. So, all right. Rapid fire is always fun,
It's
Sarah.
so fun.
I think that was a fun episode. Year in planning, it's a must do. We mentioned the podcast email before, but again, if you have any questions, comments, suggestions for an upcoming episode, email us at podcast@cckcpa.com. And yes, if you are in a situation where you are paying too much tax, you are not being proactive and strategic, or you just can't get your CPA to give you a return phone call, shoot us an email. We'll take care of you. As always, special thanks to CCK for allowing us the opportunity to utilize this platform and do this kind of thing. To Christy, thank you. You always provide value when you're on. To Robert Mays for the intro and outro music, Clarence Fisher with Tulsa Internet Marketing Services. We always appreciate you. And Emily Johansson for doing all the behind the scenes work to get us on the air. We hope you've enjoyed this episode, and we look forward to the next time that you join these two CPAs when we get a time to chat and you get to find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs in the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.